mention your name, the stock that you are asking the query on, the time horizon that you're looking for, as well as what exactly is your query all about. So write into us and let those queries pour in. So let me first take the ones that have already started coming in, and this one is coming from Ranchod Bhai and Patel, and Patel, that is, and he's writing to us from Gujarat. And Kunal, this one is for you. He's saying that he's holding 500 shares of Apar Industries since its IPO. Now he wants to know what should he do, or should he continue to hold on to it, or should he exit? If we had this conversation a while back, Apar Industries on BSE, I believe it listed in 1999. So he's been holding the stock since then. What should he do now? Yeah, it's an old listed company, Apar Industries. I think it was the prices were much lower for the stock on the listing as compared to what it is right now. I think it's at 960 plus levels where the stock is trading. So again, a stock which has done exceptionally well in the last 20 years. More importantly, even the last 3-4 months, the stock has done pretty well for itself. So being at a point where the markets are at such lows, mid caps and small caps have been beaten down. If a stock is trading at a multi-year high for itself, that itself tells you the quality of the stock price. So my sense is that if you're not in any kind of a hurry or not in any kind of an urgency in terms of availability of funds, and I think you should continue to hold on to Apar Industries.
Okay, and firstly, very good morning, Vijay. Thank you so much for joining us on the show. And I'm going to come to you with my first question. We have a question coming in from Debi Das, and this is on Persistent Systems. She's bought Persistent Systems at 3,930 rupees. Should they continue to hold, sell, average 2 to 3 time period horizon is what they have?
Very good morning. I think that if somebody wants to hold on to Persistent Systems or any ID companies, so to say, they should definitely have a stop loss in place. So the stop loss is 3090. So keep on holding this stock with a stop loss of 3090. My only worry is that if there is stagflation or a deflation or a slowdown in the US and the UK and the European economies, the IT spends would definitely see a deep cut. And that's the reason why we have seen, even stocks like TCS and Infosys and Tech Mahindra, HCL Tech, they have cracked substantially. So I would recommend a stop loss and keep on holding. It's a good company. I'm not saying it's a bad company, but the exposure to US markets and European markets is huge. So I would say that, keep on holding with a stop loss of 3090. If it doesn't break, there are good chances that it might come back also.
Good morning to you, Vijay. I'm very sorry I'm misintroducing you onto the show. And good morning, Kunal, as well. This one is for you, Kunal. This one is coming from Amar Arora, and he has 10 shares of Divi's Laboratories purchased at 3,775 rupees per share for the short term. What should he do?
So I think from a short-term view, I would probably sense that 3,600 is a good support or a base for Divi Slab. But remember that the stock had been beaten down significantly last month. So there's always going to be an overhang. Whenever the stock gets into a rally phase, those rallies would be met with a lot of offloading of long positions, or at least trying to pair the holdings on the stock price. So I think in that aspect, you might see a limited upside for Divi Slab over the very short term. But I think it's a classical stock. Even historically, I think 2016 as well, the stock had gone through a similar correction of 30%, 40%. It spent almost a year, at those levels. I think it was almost at 800, levels at that point of time. And then in a matter of, 4 or 5 years, you've seen what's happened for Divi Slab. So it's a stock which should be ideally held from a longer term play. Short term wise, keep 3,600 as a stop loss. And on the upside, I believe 3,750 could be a good zone where you can look to book out profits.
Okay, that's the view on Divi's Lab. But let's move on. Vijay, we have the next query coming in from Sriram, who's from Chennai. Now, this one is on Precol. They hold Precol shares. They've not given a buy price or anything, but they want your fundamental view coming in on this. They are ready to hold the stock for a 3 to 4 years. So is it looking good enough to hold it for that long?
Well, let me tell you, or let me give my views on the entire auto pack. Precol, for the benefit of the viewers, is an auto ancillary company. Now, whenever we see a slowdown happening in the economy, the first signs are given by the auto industry and the auto numbers, and vice versa. So, if at all we are seeing an uptick in the economy, the auto numbers should start looking up. And let me give you some data. Lately, the EV sales the PV sales and the CV sales, all the three passenger vehicle, commercial vehicle, and EV sales have been going up. So look at Maruti, look at Ashok Leyland, look at Mahindra and Mahindra. So most of the companies who are into the auto pack, even the two-wheeler companies like Hero Group and the Bajaj Auto. So we have seen an uptick, even TVS. So I'm fairly bullish on the auto pack, and I think that the auto index should cross the all-time high. And if it does, you can be doubly sure that we are not going into a recession, and the Indian economy has completely revived and it's out of the blues. And all the auto and the auto ancillary companies seemingly should have a very good business in the coming months. So yes, Precall, even on the charts, technically speaking, looks very good, and one should keep on holding. But yes, it's not a company you can hold for a very long period. So keep on booking profits in Precall. There are scores of other companies you can get into. You can get into a JBM Auto. You can get into a Minda Industries. You can also get into a Motherson Sumi, which is a fantastic auto ancillary company, but has exposure in Europe and US markets. But yes, companies exposed to India and Indian markets and Indian auto sector, I think I'm fairly bullish for at least 6 months to 1 year's time frame. All these companies should do well.
Right. This next query that I have is coming in from Babu, who's writing to us from Madurai. And he's bought City Union Bank 3,000 shares at a price of 125 rupees per share. He wants to know whether he should hold the counter or look to sell. His time frame is 6 months, Kunal.
I would suggest to hold on to City Union Bank. The stock had done a very strong breakout just about a month or back, managed to break out of its 200 moving average, even though it could not sustain. But then, that was, I think, predominantly because of the steep market correction which we had gone through in the last 1 month. But I believe that there could be a strong comeback yet again for City Union Bank. The chart patterns are improving. The stock is making a higher low for itself relative to the previous major lows of 110 in the month of March 2022. So purely in that aspect, I would suggest a hold. And since you've bought at a price which is very close to the current market price, I think there's also a lot of buffer. So I would suggest a hold.
Okay. Kunal, I'm going to come back to you again. Actually, we have a query coming in for Tata Elxsi. Now, Gauri Gupta wants to know, is it a good time to actually start buying this stock?
Well, I think Tata Elxsi has been one of the few stocks which has done exceptionally well on a longer term basis. So I remember from those 2020 lows, the stock was almost at 500 rupees, and from there it's jumped up to almost 9,500, which it had tested I think 3-4 months back. Now the stock is at 7,800 levels. So the only question over here is that either you're looking at the stock stabilizing at current levels and then relatively outperforming the other mid-cap IT peers. That could be possible. But then if you're looking at an upside, I believe say over the next 6 months to 1 year, then the probability of upside of the stock to an upside of maybe say 8,500, 8,800 gets restricted. So it's a stock which has limited upside, and I would not suggest a buy at current levels. In fact, the risk reward is a bit skewed for Tata Elxsi. I would suggest an avoid.
Okay, this one is coming in from Pramod. He's writing to us from Kerala, and he's saying that he's holding Indus Towers at a price of around 200 rupees per share. He wants to know whether he can continue to hold on to this counter for the next 2 years, and also should he look to buy some more at these levels. What's your take on this one, Vijay? That is Indus Towers for you.
Well, I think if you ask me fundamentally, I'm not at all bullish on the tower business at all, because it's not a futuristic business. Today we are seeing a lot of 3G, 4G and even 2G is going on. BSNL provides you 2G services. But again, once 5G and 6G come into the fore, I think that this entire tower business is going for a toss. And similarly, all the optic fiber business is going for a toss. Because we would not require optic fiber at all for internet transmission. Now it would happen through low orbiting satellites, and companies like Bharti Airtel, they have acquired companies in UK by the name of Web1, and Amazon is doing a stupendous job globally, providing internet services, 5G and 6G. So the tower business would be completely out of sync with the current technologies and the technologies which are there to come. So for a longer term period, I definitely recommend that if you have Indus Tower, you get out on rallies, because it's not a futuristic business. But yes, maybe in the short term you might see some spike because the markets are completely oversold. and we might see some spike in the stock. But again, as a business model, and as a futuristic business, I don't see much promise in this. So Indus Tower is a sell on rise.
Kanal, coming to you, we have the next query coming in on GSFC. Now, Manoj Kumar wants to know the target for this one for the next 1-2 years.
So I think GSFC has been one of my favorite mid-cap picks, at least over the last many months. I remember tracking the stock and recommending it when it was at 128, just about some 3-4 months back, where it had jumped up from those levels to almost 190-98 levels for itself. So the stock is now back at that 136 mark. It's completing a retracement. It's also, I think, crossed above its 200 moving average, if I'm not wrong, just about, I think, 2 or 3 trading sessions back. So all of those are confirmation points that the trend is getting resetted and restarted for GSFC. Now, if you're looking at it from a next 1-year time horizon, I would expect at least the previous highs of, I think, 198, 200 approximately to be tested in the stock price. So the risk reward is quite favorable, and I think buying the stock makes a lot of sense at current zone. 200 potentially could be a target which you can keep for the next 1 to 2 years.
Okay, this one is from Sudha, and she's a senior citizen, and this question she's asked actually specifically to you, Kunal. She's holding Axis Bank 160 shares from the levels of 645 rupees per share. She wants to know a short-term target for this particular counter. Axis Bank, haven't you been bullish on this one?
So I have been bullish on Axis Bank, but then off late, I think the stock has now corrected very sharply. In fact, we did this comparison yesterday from the private sector banks, where Axis Bank and ICICI Bank, in fact, ICICI Bank and Axis Bank were the top 2 performers, from the 2020 lows. But somehow Axis Bank in the last, I think, 4-5 months, start of this calendar year, has now gotten in line with the underperformance of many of these other private sector banks. So short-term wise may not be a best stock to buy at current levels. There is a lot of overhang in terms of selling pressure for Axis Bank. So my sense is that if you can either switch to maybe an ICICI Bank or HDFC Bank, the chances of you making returns, quick returns on the short-term time scale could be far more higher as compared to a stock like Axis Bank. So if you can make that switch, then I believe switch to either ICICI Bank or HDFC Bank.
Vijay, the next query we have coming in is on SpiceJet. This query is from Vivek, and he wants to know, he's bought SpiceJet 3,000 shares at around 79 rupees. What should they be doing with the shares? Should they exit? Should they continue to hold SpiceJet?
Lately, SpiceJet has not been, is not doing a great business. I've seen the results, and the results were not so great. And especially when crude prices are high, let me tell you, about 30 to 40% of the expense of flying an airplane is on fuel, and the ATF prices have gone up. So I think that in spite of the fact that the air traffic and the overall, occupancy is high, but making money would be a challenge with most of the airline companies. So until we see, crude considerably cooling off, and so I don't think that any of the airline companies would make any profits. So I think that get out on rallies in SpiceJet would be my call, and wait for crude to settle down. If you are a very long-term investor, there are chances that crude might cool off, maybe 6 months down the line, and then we'll see an uptick. But in the short term, if at all the crude is boiling, I don't see airline companies doing very well.
The next query is for you, and this is from an anonymous viewer because he's not ready to tell me his name. So he's telling me that he has BSE shares at a price of around 860 rupees per share. He is mentioning that he's young and he can hold on for the next 10 years. Should he?
Well, I think that for the next 10 years, BSE should do well. And yes, it has corrected considerably. We have seen almost a 40% correction in BSE. But I think that exchange business is one of the best businesses because you have you have limited investments, and whatever investments you have, the capex you have done, it actually supports you for a longer period of time. So the capex is not there. What all you earn is brokerage revenue and other revenues you make through the transactions. So I think with a 10-year perspective, BSE is good. But let me tell you, this gentleman, whatever his name is, because he wants to stay anonymous, I won't recommend to stay in a stock like BSE for 10 years. So he might make his money, definitely make a profit, and you get out. If you want to be for a 10-year time frame, be in a Hindustan Lever, be in an ITC, or be in a Tata, maybe a Tata consultancy. So there are other great companies to be in with a very, very long-term perspective. But BSE, yes, it would definitely go up and down. So whenever it comes up, you make your money and make your profit, get out and get into another story. But yes, if at all NSE gets listed during these 10 years, I think that switching to NSE would be any day a better idea than being in BSE, because most of the trades and transactions happen on NSE, which is much higher than BSE.
Let's keep an eye on that, Kunal. Moving on, the next query we have is coming in on Nalco. Sanita Rai wants to know whether she can add Nalco at current price.
So, over the last, couple of days, I've mentioned this, specifically for these metal stocks and commodity related names, that they are now getting into a very strong value zone. So if you have a time frame of at least 6 months, 1 year plus, then it makes a lot of sense to start buying these stocks at current levels. You can have a buy and dips kind of a strategy because, for example, Nalco has corrected from 130.35 to I think sub 70 or 65 levels. So it's almost a 50% drop in a stock like Nalco. Now, that's a good starting point. But then we've seen historically that metal stocks, they can get into a phase where the correction could be in the tune of 60% to 70%. So you would want to keep some powder dry and wait out for possibly another 10% correction into a stock like Nalco. So you can start buying at current levels, but then average on the lower side could be a good opportunity and a good strategy, provided you have a time frame of at least 6 months to 1 year.
All right, Kunal, this one is for you. This one is come from Anjali. She's writing to us from Nasik. And she's saying that she's bought Mahindra & Mahindra at a price of around 380 rupees per share. But now she wants to know whether she should book out of it and instead buy Force Motors, which the stock has corrected from the levels of around 6,000. Do you think this strategy makes sense? No doubt she's actually made a good profit on her M&M buy. She bought it at around 380 rupees per share.
See, I think the market moves in a way in which the stronger stocks gets more stronger and the weaker ones gets more weaker. Now, if you want to put in your, your profitable sum into a stock like Force Motors and the stock which is almost at a 1 year, 2 year low for itself, I think would be a difficult proposition because you might need the stock to get into a phase where it consolidates. There's a lot of positive news flow coming across into the stock price, and then you see recovery. It's far more better that, and look at it in that manner, that if these kind of stocks also get into a recovery phase, then the large cap ones and the ones which are leaders from the auto pack, they would also perform in a more stronger manner because the money would keep on chasing these stocks more predominantly. So I would suggest that you should not make that switch from M&M to Force Motors. I think at best, if you would want to probably diversify from M&M to other names, then you can look at maybe a Maruti or Eicher Motors.
Okay. On that note, we're going to slip into a short break, but stay tuned in because we'll be taking your queries on the other side after this break.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you asked, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
Nikunj, you're a very seasoned market observer and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think this is again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
The personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy. Only on ET Now.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
Now, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you asked, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's all.
Welcome back, and you're watching Buy Now, Sell Now on ET Now. Let's move on, and Kunal, this query is coming in for you, and this one is more on terms of Nifties. Now, Sagar is asking, do you see the market going towards the 15,900 to 16,200 range, especially given that there is a big unfilled gap coming in?
So, Vinny, I believe that this 15,700, 750 mark could be an important litmus test first. Now, the reason for that is, if you remember the last 3-4 months, this was the level where the indices took a lot of support. So, on the way up as well, the markets would take, ideally it should take a lot of time and spend a lot of time to break past about the 15,700, 750 mark. Because that's where we generally say that, a support which changes its behavior turns into a resistance and gets the similar respect for itself. So I think in that sense, 15,700, 750 mark could be an important litmus test. But if we break past and if we sustain above that, then we can expect the markets to not just come towards 15,900, 16,000 mark, possibly even go to 16,400 as well. So that could be the potential upside which the indices could be looking out for. So 15,700, 750 is a resistance. If you manage to scale past above that, then possibly another 500 to 700 points on the upside.
Okay, this one is from RK, and he wants to know which one is a better one to invest over a period of 1 year, Kunal. Is it Cosmo Films or Raymond, two different divergent sectors altogether? But which of these two makes sense to invest for a year?
So I think Cosmo Films is a stock which has gone through a very sharp rally, then a correction. I think from 1400 the stock has come back towards 947, 945 at current juncture. So the correction has been a bit less as compared to the rally which the stock had seen from those 2020 lows. Ideally, such kind of a stock, they tend to correct somewhere close to 40% to 50%, if not more, in such a kind of a market correction. So possibly there could be more legs on the downside for a stock like Cosmo Films. Raymond, on the other hand, I think has been far more stable stock because it was a late mover going into a rally. I think the major part of the rally happened in just the first 3-4 months of this calendar year. And I think in that sense, it could be a stock which could be looked at. So I would probably prefer Raymond as a much better bet. But again, over here, a buy and dip strategy is what I would advise.
Vijay, coming to you for the next query, we have the query on Tata Steel. Now, Achal has bought Tata Steel with a long-term view, 25 shares at 410 rupees. What is your view coming in on this one? Should you continue to hold this one?
Well, yes, I think that, if you look at the downside, probably we might see, 750 odd, because we've seen the iron ore prices and steel prices coming down globally. But yes, the kind of cash flows Tata Steel has, I think that it's a screaming buy at these levels. And, if somebody even, averages at these levels or even buys a fresh in any dip, I think that I'm a supporter of the commodity stocks with a longer run. And as Kunal also said that, we might see a run happening in all the metal companies, maybe Dalco or a Nalco or a Tata Steel or a Hindustan Copper. So if you look at, these stocks with 1 to 2 years perspective, these are screaming buys because, they have huge cash flows, very low PEs. Some of these stocks I'm talking about, even Steel Authority of India at these levels, they are trading at a price to earning of 1.5. So look at the kind of cash flows these companies have. So there is a very little chance that, you would lose money here. And there might be, some kind of a correction, but those would be opportunities to gather and, nibble into these stocks regularly. So I would recommend a buy, buy on declines. And one should keep on averaging Tata Steel and buy with at least 2 to 3 years perspective. There is money to be made.
Okay, this one is from Abhilash. He's writing to us from Kolkata and he's asking Kunal, what's the prospective price levels for Tata Communications if bought at levels of 880 levels? I believe he's already bought it at those levels and he's looking to hold on to the counter for another 6 to 8 months. So for that time period, what sort of a target should he aim for Tata Communications, which we all know was a star performer post-COVID, but now it has seen a sharp decline from those levels?
I'm sure, Cheryl, you'll remember this as well. So I think Tata Communication, yes, I think makes a lot of sense to buy at current levels. But then my only concern over here is with the time frame. 6 months, 1 year is a very small time frame for a stock like Tata Communication. It's a behemoth in terms of the stock patterns and the stock size. And typically we've seen that whenever the stock gets into an uptrend mode, you would not want to get in early in terms of buying the stock at a crucial level in terms of dip or support, and then you don't want to get out early when the stock actually starts to get into a start of a fresh trend for itself. We've seen historically that whenever trends starts for Tata Communication, they've lasted for 3, 4, 5 years on a trot as well. So I would sense that extend your time horizon from 6 months to 1 year and look at this play as more of a longer term play. I'm sure, I believe, from current levels over the next 2 to 3 years, there could be a lot of money being made for Tata Communication from current zone.
Let's move on, and we have the next query coming in from Vishal. And Vijay, this one is from you. It's on KEI Industries. Is it a good time to add KEI Industries for a long term, or should one wait for further correction?
Well, the reason why we saw correction in KEI and all the wire companies and companies in this space, in the electrical space, was that the copper prices were going off the roof. So we saw a decent correction happening in these companies. But again, I would say that KEI is one of the better companies. And even on the charts, we do not see such a correction happening. Again, I would say that, I see revival happening in the Indian economy. It might take 6 months to actually see it. But, market sense always is ahead of what's actually happening on the ground. So KEI is one of the company which is into the real economy, which contributes to the real economy, contributes to infrastructure, contributes to the real estate space growth. So I think that it's a good buy. and it's a good hold. So keep on holding KEI Industries if you have, or even if you want to buy it afresh, I think that anywhere around 1100 is a great level to buy.
Okay, this next query that I have is coming in from Radhakrishnan, and he's saying that he wants to know the long-term prospects for Glenmark Life Sciences. He's saying that the stock is currently trading below its IPO price, and he has around 350 shares purchased at an average price of 710 rupees per share. Vijay, what's your take on this one? A recently listed counter, an arm of Glenmark Pharma, Glenmark Life Sciences.
Well, I think that, even if the stock starts doing well, which I'm not sure about, it would take a long time. So the best pick I have right now in the entire pharma space is Dr. Reddy's, followed by Sun Pharma, and then Cipla. Because, these companies haven't seen such crack. And there are companies like Wockhardt, like Glenmark, even Lupin, they have seen a huge crack. So I would recommend that, shift to Dr. Reddy's or a Sun Pharma or a Cipla, which give you a better option to be in the same space, and you can recover your money back fast. So as far as my recommendation goes, sell on rallies is the call.
Kunal, we have the next query coming in. So Dadaradi has got two stocks. One is BEL, which he's bought at 102 rupees, and other one is GAIL at 125 rupees per share. How are these ones looking like on the chart? Should they continue to hold or exit?
I would suggest to maybe look at exiting GAIL and then holding on to BEL. I think that's a much better name. It's been one of the most strongest and the performing PSU stock over the last 1.5 to 2 years, as well as over the last so many years. GAIL has been more of a flip-flop because the stock gets into a rally trend breakout phase, but then the breakout fizzles out. All of a sudden, you see the stock coming back towards its major mean points. 120, 130 has been the mean or a pivot range for GAIL for a lot of time. So doesn't make sense to hold on to the stock at current juncture as well. I would suggest that if you can probably make that switch even from exiting GAIL and then switching on that same fund to maybe a BEL, that could actually turn out to be a better bet.
Okay, with that, let's kickstart with the rapid fire then. And Kunal, first one is for you. Akash from Delhi wants a view on Asahi India. He's already bought it at 493 levels. What should he do?
Hold on. Short-term targets you can keep at close to 545.
Okay. Vijay, the next query is coming in from Mani, and this one is on SRF versus Pidilite. Which one is a better bet for the long term?
Well, I think SRF seemingly is a better bet for a longer term. And it's into a niche space because of the large market space. So I would recommend SRF.
Okay, I think we have a bit of a glitch in his audio. But Kunal, this next one I'll take to you. Then Baby John wants to know, how does Sterlite Tech look over the medium term? I believe he's already purchased. Should he continue to hold on to it?
So I think depends on the purchase price. If you bought at current levels of 145, then you can look to hold on. Shorter term targets you can keep at 175, 180.
Okay, Vijay, coming to you. Arun is holding 150 shares of IRCTC at 850. With a long-term view, should they? Is it a good time to average at these levels or wait for a further downside?
Well, we can wait for a further downside. Anything below 550 would be a great level to average, and keep on holding.
Okay, this one is coming in from Kumar from Bangalore. He's already holding Deepak Nitrite shares, 270 shares at price of 1,294 rupees. Should he continue to hold or average? Or what's your take on this one, Kunal?
Well, I particularly do like the stock from a portfolio perspective. So if you're looking at it from a longer term play, I would definitely advise a buy or even an average at current levels.
Kunal, how is Century Ply looking at current levels? That's a query coming in from Saroja.
So I think at current levels of 510, 12 levels looks attractive, and I would suggest a buy at current zone.
Okay, this one also is for you, Kunal. This one is from Hanif, Titan, 2100 call option for June expiry at 31. Should he hold or sell?
I think you should look to book out over here.
Okay. Vijay, we have the next query on Shriram Transport. How is this one looking like for the next 1 to 2 years? The query is coming in from Ashish.
Well, as I mentioned, I'm fairly bullish on the commercial vehicle segment, and Shriram Transport primarily funds these vehicles. So I think Shriram Transport is a very good buy at these levels, and I think it's going to go up to 14.
All right, and with that, we come to the end of the rapid fire and also of the query segment on this edition of Buy Now, Sell Now. Thank you so much, Kunal, as well as Vijay, for joining us on the show. Especially Kunal, thank you for that BNS and Pathshala segment. But on that note, we slip into a break on this edition of Buy Now, Sell Now. But stay tuned, more on the other side. Don't go anywhere.
Always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.